Welcome to TechPacks, your partner in advanced research and development. In this video, we will be presenting the details about one of the most demanding research projects titled Optimizing Parameters of ARIMA using GOA for precisely forecasting stock market prices. This research project can be extended further to publish a research paper in a reputed journal or used for your PhD or MTech thesis. So, if you are a researcher, PhD, or MTech research scholar working on a similar research project and need expert guidance to handle the complexities of research in this field, you're in the right place. Watch this video till the end to gain valuable insights into the project's objectives, methodology, and results. We'll also provide a demo of the code in action, showcasing its key features and functionalities. So, let's begin. Our professional researcher will now take the lead and guide you through the details. Here we go.
Hello friends, welcome to TechPacks Research and Innovation Services. Today I am here to present you one of the research area which is inspired for artificial intelligence, specifically for the forecasting models. So here we are presenting an advanced regression scheme for forecasting the stock market. So before starting this video, let's talk about what we will cover into this video. In this video, initially we will discuss about the application area where forecasting models can be used and can be realistically implemented. Then whatever the code we have designed for stock market prediction, how to execute it, what are the software requirements for it. Further to that, we will discuss about what exactly the current problems and current systems and how we overcome that by proposing the method. We will also give an overview to the proposed method. Finally, the experimental outcomes and findings will be discussed. So let's start with the application areas. So forecasting can be used in many of the areas like for the agriculture one, for the climate forecasting, for the weather forecasting. So you can see for the climate forecasting and for weather forecasting, the forecaster models are used. So those can help the agencies to take the appropriate decisions to handle that. For the financial market, like for the stock prediction, financial investment prediction, all those stuff can also be done with the forecasting models. For the healthcare, right, where the forecasting can be done, as recently we have seen for the COVID-19 was there. So the forecaster model were there, those were giving the pre-predictions that how many cases are predicted and can be there, so that the health agencies can take the appropriate steps to handle that. So such forecasting model, when we do have the data for the previous years or the previous stats, we can do the prediction for the future. So there the forecasting models can be used. Today the application that we are going to show is for the stock prediction for the financial market. So let's see how the code is to be executed. So you can see this will be the folder that we're going to share. Here is a code folder, you just need to go into that. We have done it into two scenarios, one the analytical part and one for the proposed model. So for the analytical part, let's go to that part firstly. We do have the data set from the different banks like Kotak, Bajaj Finance, HDFC, and many others. It is not mandatory that you can execute it for that. We are using the Indian companies where the stocks can be analysis, and you can get it from the Nifty website in the Excel format. So to run this code, you must have the MATLAB software with you. So the MATLAB version that I am using is 2019. So you can use 2018 or the upper version, but make sure the MATLAB version that you are using must be the full version. So you just need to copy this path from the folder where the code is placed and then go to the MATLAB, and here you just need to paste it, press enter. All the files that we have wrote will be shown here in the current folder here. So as we have implemented 5 different techniques for the analytical purpose, one of them is ARIMA, another one is LSTM, third one is deep learnings by LSTM, then nonlinear ARIMA model, then SSM model. So we what exactly it is. So before running this code, you must be to the editor window, and there is a run command over there. You just need to click on the run so that it can be processed. So when you click on the run button, it will ask you which file you want to process. So a figure window will be appear from which whatever the company you want to analysis, you can just select it. For example, let's say it is HDFC. So I'm clicking on open. Once it will be there, it will ask for what forecasting you want to do for the opening of the market, the higher value market, the lower value it is, and at what value it can be closed. So because the data set that we are following is giving the information of these four sections, that when market get opened, when it get closed, what was the highest value, what was the lowest value. So you just need to give the option. For example, I am doing it for the open one. When I press 1 and press enter, it will give me the stats and the analysis for the different outcomes. So you can see this was the original data along with the dates, and this was the actual and the ARIMA's outcome. Then further the residual analysis and the autocorrelation function outcomes has been analyzed, and this is the future prediction that we have made with the actual forecasted outcome and the auto-regression model, right? So these two curves are the future predictions. This is the previous data through which the regression has been done. So let's see that what exactly we have done. So initially we are following this base paper in which they were working on the deep learning models, assessing the deep learning models for the Egyptian exchange prediction, but we have done it for the Indian market, where we have evaluated the regression model as well as the deep learning model, and finally after the analysis, whatever the technique was best, we have improved that. So the model that we have used were, this is the ARIMA model. Then further to that, this is the LSTM model in which the network has been implemented. This is for the BiLSTM, which is an RNN model. Initially, as I already shown you the demo, that how it executes, that it will select the file, whatever the company, then what kind of data you want to forecast. Accordingly, it will get the data from that particle. So further processing, pre-processing of the data has been done. Later on, as per the data is divided and the information is extracted from it, then the model has been created, and then the training and prediction of the data has been done. So then the next model is basically for the non-linear ARIMA model. So finally the SSM, that is basically the steady state model. So so the outcomes will be shown here. So finally the analysis has been done in the parameters like MAE, R square, MAPE, and RMSE and MSE. So after running it for all different companies, we have made the stats and did the analysis in terms of these parameters. After the analysis, we came out that ARIMA was getting the better results when compared to the another models. In the second section of the proposed, where what we have proposed, in that is here in the same folder, you just need to go back, go to the proposed model, copy the path again, control C, go to the MATLAB, here select control V and enter. You can see the proposed model is there. This is the optimized model. So basically the ARIMA model that we do have, they are having the three different factors to process on which the ARIMA basically did the prediction. So what we did, we just applied the GOA method, that is the grasshopper optimization method, which is an meta heuristic optimization algorithm, to identify that what hyperparameters of these three parameter values can be best fitted as per the data. This make the proposed system dynamic and applicable to the different data sets so that the predictions can be effective. So you can see the initial steps were same, but where the ARIMA model was initially 0, 1, 0, these are the three parameters that we need to identify. Now what we are doing, we are identifying these values by applying the proposed model. Here the optimization model has been implemented, where GOA is giving us the best fitness value, in which the third parameter is set to 0 and first two parameters are evaluated by the GOA, and these factors give us the best prediction outcomes, which are further compared and shown in terms of results. So I'm running this code and running the same code with the same file. For example, HDFC was the initial stage. I am opening it with the open data and then press enter. So it gives us the results, that what exactly the normal model is giving, and then what the proposed model is getting, and then finally a comparison has been conducted. So it will take some time because iterations has been executed. You can see the GOA start working and getting the objective function. The objective is to get the lesser variation among the actual and the predicted outcomes. So it will take some time because the number of iterations had to be executed. You can see at the initial stage, not effective combination came out till now, and because optimization algorithm generally give us the random solution every time whenever we are going to run. So let's see whether it is improving in the iterations or not. How many iterations we have implemented. These are basically in our proposed method we have taken 20. So here you can see the error got reduced from 52.69 to it comes to 51.596. So as the iterations will be going on, there will be improvement expected, and finally on the basis of that, with the least objective value, the best outcomes will be there. So let's wait for the iteration to be get completed. So 12 of the iterations has been already done. As you can see, regression models are best, but tuning their parameter can be a challenge. So that's why we are using the soft computing technique into it. 16 of the iterations are done and we got one stage improvement. So whatever the best solution will be there, that will be taken for the ARIMA, and then a best tuned ARIMA outcomes will be there with the least MAE and other factors. Final comparison is also shown in the graphical form. So next part will be to see the results. So 20 of the iterations are about to finish. So here you can see this is the outcomes of the proposed results. Wherever the initial parameters those we were having with us were MA of 56, R square of 0.622. Here you can see MA is reduced, error is reduced, R square must be improved, so it is improving. MAPE value is basically 3.9. Here we have achieved 3.5, which is better. Then mean square error is 5028, which was initially 5768. So in every parameter we are getting the improvement in the proposed method. So it is not static for only this data set. When we are going to take the another data set, it will be a dynamic model and give you the better results. So this is the improvement that we have made into this, and further modifications are still possible. Those can be implemented for the real-time applications, for the research purpose, in the doctorate, for the industrial purpose. So for that kind of information or any upgradation information, you can contact us directly. Thank you. Thanks for watching the video.
Thank you for watching this video. We hope you found it informative and engaging. For more information about this research project and to get our consultancy services, click the link in the description below. At TechPacks, we offer comprehensive support for researchers, PhD, and MTech students in the fields of engineering and ICT. Our services include selection of research topic, helping you choose the right topic tailored to your interests and the latest trends. Synopsis preparation, crafting a clear and concise synopsis with well-defined objectives. Coding assistance, providing expert help with writing and optimizing code in various tools and platforms. Research paper writing, assisting in drafting and editing research papers to meet the highest academic standards. Dissertation writing, offering complete support for your dissertation, ensuring consistency and quality. Plagiarism check and removal, ensuring your work is original and free from plagiarism with advanced detection tools. We also offer customization services to meet your specific project needs. Whether you require a modification of an existing project or a completely new application, our team of experts is here to help. Don't forget to like, share, and subscribe to our channel for more updates on cutting-edge research projects and expert advice. Thank you for choosing TechPacks. We look forward to collaborating with you on your research journey.